You've got to remember that the Indiana House of Representatives voted in the 2006 session by a vote of 96-0 to totally abolish the property tax. Now, I sort of viewed that at the time as an election year stunt, something they'd go back to their constituents and say, hey, you know, I voted to abolish the property tax. They weren't really serious. But they did vote 96-0 to abolish the property tax. And again, that totally eliminating the property tax, one way or the other, is the only plan. Every other plan is a radical idea because look at the history. Just pruning it back has never worked. We tried it repeatedly. There are two plans floating around out there. One, which I favor, but I don't think could pass, is the one that's being pushed by Eric Miller of Advance America and other groups, which includes a cap on state spending, limiting state spending to inflation plus population growth. In other words, you're not cutting government back, but you're keeping it constant in real per capita terms. You're not cutting it back, but you're only letting it grow to that extent. If you went with a plan like that, you obviously have to do, because state revenues will increase faster than that. You build up a kitty, a cushion, and you don't have to do all that much on the tax side, probably another 2 percentage points on the sales tax and 1% on the individual income tax. If the General Assembly doesn't have the stomach to do that, and I'm guessing they probably don't, then if you totally abolish the property tax and put it in the Constitution that we will never, ever again touch real or personal property for purposes of raising revenue, and you did sort of a plain vanilla, no spending cap, you would need about another 2 percentage points on the sales tax and about another 2% on the corporate supplemental net income tax. That's our main state profits tax. Those two together would roughly replace all school property taxes. So you got 2 and 2. The third 2 of the 2-2-2 plan is a statewide average whereby for civil units of government, counties, towns, cities, townships, you replace the current property tax base with an income tax base. And there are ways to do that. A lot of people say, well, you can't make the transition. My answer to that is go look up MapQuest, and you can figure out what the tax base is. That will average about 2 percentage points statewide on the individual adjusted gross income tax. That's the IT-40 you file every April. It will be more than 2% in some jurisdictions. It will be less than 2% in others, but statewide it will average about 2%. So that's where the so-called 2-2-2 plan, 2% sales, 2% corporate profits, 2% individual income tax. In exchange, though, I would certainly not advocate that we pass any of those taxes until the Constitution has been amended. In other words, we get the candy up front, guys. We amend the Constitution, completely wiping out the property tax. Then the General Assembly can come along and pass something like a 2-2-2 plan. That's a trade I would willingly make, providing it's in the Constitution. I did spend 13 years as the tax and education guy for the Indiana Chamber of Commerce. And in that capacity, I had a very good listening post. Prospects would call me saying, well, what about this tax? What about that tax? I don't have the slightest doubt in my mind that if you could say, Indiana has no tax on property, period. They understand that. It's not, well, if you do this, you get that kind of abatement, you get that and the other. That gets confusing. But that guy who's, you call him whatever title you wish, the VP for location decisions, if you could just say over the phone, hey, pal, Indiana has no property tax, they get that message. A lot of people are running around saying, well, you're going to need a sales tax rate of 13% or 12%. Well, that's true if you do nothing but raise the sales tax. And generally, local sales taxes are really bad news. They're bad news because they distort buying patterns. I mean, if you can drive 2 blocks down the street and get in a different jurisdiction to buy a new car, you know, another 1% or 2% is a lot of money, and you'll do it. Plus, you have a number of political jurisdictions out there that have virtually no retail outlets. You know, a small town. Maybe they got a gas station. Well, you're not going to run town government off sales taxes on gasoline at one filling station. If you do, that filling station is going to be out of business because everybody's going to drive down the block to the other filling station. So doing it solely with a sales tax is not a good idea, both for policy and practical reasons. That's why I always keep coming back to a more balanced approach. You know, 2% statewide sales for schools, 2% statewide corporate profits for schools. But then for civil government, this average of about 2% on the individual income tax. You add those three up, and you can get rid of the property tax totally.